It is late Sunday night, March 8th, 2026. Asia has already opened, silver is reacting, and every retail investor who stayed up to watch the Shanghai session thinks the main event is behind them. They are wrong. The real price shock is not coming from Shanghai. It is coming from London, and London opens in approximately 4 hours. Here is the number that makes the London Open different from every other London Open in the last 3 years. European gas storage has fallen below 30% of capacity news track heading into the summer injection season, with the Strait of Hormuz closed, Qatar's LNG production halted, and a war that the White House says continues for 4 to 6 more weeks. European gas storage has just dropped below 30% of its capacity, well below its 5-year average. Lower reserves make countries more vulnerable to supply disruptions and price volatility. Kiko. Below 30% in March, with the world's most critical LNG export route closed, with the world's third largest LNG exporter, Qatar, having declared force majeure, and with the summer injection season, when Europe needs to refill from 30% back toward 80%, beginning in approximately 3 weeks. The traders who will be sitting at LBMA terminals in London at 8:12 a.m. GMT have been looking at those numbers all weekend. They have been looking at something Wall Street's paper traders have completely failed to price. And when the London silver price auction opens, the benchmark that producers, refiners, the investment community, banks and central banks, fabricators, jewelers, and other consumers from around the globe use as their reference price metal sedge, those traders are going to set a number that reflects what physical silver is actually worth to a continent that is staring at its lowest gas reserves since the 2021-2022 crisis. With no clean supply route to fix it, I'm going to walk you through exactly what Europe sees that COMEX cannot price on a weekend: the energy math, the ECB trap, the LBMA mechanism, and the 3 honest scenarios for what the London Open does to silver before Wall Street even wakes up Monday morning. Every number I give you is public and verifiable. Links are in the description. Section 1. What Europe is actually looking at this weekend. The numbers nobody is combining. Before I show you the LBMA mechanism, I need to build the complete picture of what European institutional buyers have been staring at since Friday's close. Because each individual piece of this story has been reported, nobody has put all the pieces together in one place and shown you what they mean combined. Piece 1. Dutch Title Transfer Facility futures, Europe's benchmark gas contract, rose 35% on Tuesday to more than 60 euros per megawatt hour. On the week, prices are around 76% higher. B in crypto, 76% in 1 week. That is not a gradual repricing. That is a market pricing in a supply emergency in real time. Piece 2. Qatar paused LNG production Monday following Iranian drone strikes, reducing near-term global LNG supply by almost a fifth. B in crypto, Qatar supplies approximately 10% of Europe's LNG. When Qatar halts production and declares force majeure, Europe loses its single most important spot supply source at the exact moment it needs to begin the summer injection cycle. Piece 3. Gas prices in Europe have risen by 70% in a week. An LNG tanker that had been scheduled to head to France changed course and sailed toward Asia. CME Group. That is not a theoretical supply problem. That is a documented physical cargo, the BW Brussels, carrying LNG from Nigeria, that was supposed to arrive in France, turned around, and headed for Asia because the Asian premium was higher. The metal, or in this case the gas, goes where the price is highest. Europe is watching its supply physically reroute away from it in real time. Piece 4. EU gas inventories have reached a record low, less than 30%, while the norm was around 45%. Crypto slate Russia's Vladimir Putin has also threatened to cut off gas supplies in response to EU plans to ban Russian LNG, a second supply shock layered on top of the Hormuz closure. Piece 5. Europe started 2026 with much lower gas storage levels than recent years, 46 billion cubic meters at the end of February 2026, compared to 60 BCM in 2025 and 77 BCM in 2024. Storage refill operations could be disrupted, placing pressure on industrial energy costs in Europe. EFCA partners. Put those 5 pieces together and here is what you have. Europe entered the Iran war with gas storage at its lowest level in 4 years. The war immediately cut off Qatar, 10% of Europe's LNG supply. An LNG tanker already en route to France turned around and went to Asia. Gas prices rose 76% in a single week. And the summer injection season, when Europe needs to go from 30% to 80% storage, begins in 3 weeks. The institutions that trade at the LBMA know all 5 of those numbers. They have had 48 hours to think about what they mean combined. And in 4 hours, they get to express that analysis in the silver price. Section 2. The ECB trap. Why Europe's central bank cannot solve this and what that means for silver. Here is the specific mechanism that makes the European energy crisis bullish for silver specifically, not just for oil or gas. It is the ECB trap. and it is documented in the interest rate market data from last week. At the close of trading on Tuesday, March 3rd, the Eurozone interest rate market was pricing in a 33% probability of a 25 basis point policy rate hike in December 2026. MetalSedge read what that number means carefully. Before February 28th, the ECB was expected to cut rates or hold them flat. The rate cut cycle was the base case. After 1 week of the Iran war, there is now a 1 in 3 probability that the ECB ends the year with a rate hike, moving in the opposite direction from what was fully priced in as recently as last Friday. The ECB ended its rate-cutting cycle in June 2025 as inflation returned to target. Since then, there have even been calls for additional cuts given the fragile and uneven recovery across member states. But the renewed rise in energy prices will add upward pressure on inflation in the near term. This makes further near-term rate cuts highly unlikely. MetalSedge. That is the trap. The ECB was done cutting. The European economy was running below potential. Growth was fragile. The base case was stable to easier monetary policy through 2026. Now a 76% gas price spike in 1 week has reintroduced inflation as a primary concern, at exactly the moment the European economy is least able to absorb a rate hike. Stagflation risks have risen. In the worst-case scenario, the Eurozone economy would face the greatest risk: stagflation, a combination of stagnation and inflation. The prospect of sustained higher energy pricing and deteriorating sentiment has renewed concerns around stagflation risks. MetalSedge. Just as the Federal Reserve and the European Central Bank were considering rate cuts to support growth, the oil surge has reintroduced stagflation as a primary concern. 99 bitcoins. Stagflation is the one macro environment where traditional safe havens outperform everything. In a pure inflation scenario, bonds are bad, but equities can hold up if earnings grow. In a pure recession, bonds rally and equities fall. In stagflation, the combination of rising prices and falling growth, bonds perform poorly because inflation is rising. Equities perform poorly because earnings are falling, and cash performs poorly because inflation is destroying purchasing power. The only assets that have historically preserved value in stagflation are hard assets: gold, silver, commodities. The ECB trap produces the exact macro environment that drives institutional silver buying, not retail buying, not speculative buying. Institutional buying by pension funds, sovereign wealth funds, family offices, and central bank reserve managers who need to position their portfolios against a stagflation scenario that was not in anyone's base case 2 weeks ago. Those institutions do not buy silver on COMEX. They buy silver in London through the LBMA at the morning fix. Section 3, the LBMA mechanism. How London sets the price before Wall Street opens. Let me explain exactly how the LBMA silver price gets set and why it matters for what happens to COMEX when New York opens Monday morning. The London bullion market is by far the largest global center for over-the-counter wholesale transactions of gold and silver, followed by New York, Zurich, and Tokyo. Most of the members of the LBMA are major international banks, bullion dealers, and refiners. Discovery alert. The LBMA gold price and LBMA silver price are the global benchmark prices for unallocated gold and silver delivered in London. Producers, refiners, the investment community, banks and central banks, fabricators, jewelers and other consumers, as well as market participants from around the globe, use the benchmarks as reference prices. MetalSedge. Here is the specific timing sequence. The LBMA silver price auction runs once per day at noon London time, that is 7:30 a.m. Eastern. COMEX's official open is 8:20 a.m. Eastern. The LBMA silver benchmark is set 1 hour and 20 minutes before COMEX even opens for its primary session. That sequence matters because of what the LBMA benchmark represents. Bullion dealers use either the LBMA price or the live spot price when buying and selling metals. The LBMA price for gold and silver is regarded as an authoritative global market price. Discovery alert. When European institutional buyers flood the LBMA with physical silver orders in the hours before the noon London fix, when pension funds, sovereign wealth managers, and central bank reserve teams in Frankfurt and Zurich and Amsterdam are positioning against the stagflation scenario I just described, those orders set the LBMA benchmark. And when the LBMA benchmark prints significantly higher than Friday's COMEX close, COMEX does not debate it. COMEX follows it. The London price is the authority. New York is the follower. Most wholesale OTC trades are cleared through London. The average daily volume of gold and silver cleared at the LBMA auctions was 211.8 million troy ounces in silver, 978 transfers worth $3.1 billion daily. Y charts. $3.1 billion of silver clearing through London daily, every day. That is not a small market being influenced by COMEX. That is the primary global clearing mechanism for physical silver. and it sets its benchmark before COMEX opens every single morning. Today, that mechanism opens with a European energy crisis that has repriced gas 76% in 1 week, an ECB trapped between stagflation and growth collapse, and a war that the White House says continues for another 4 to 6 weeks. Section 4, the bear case. Why the London Open may disappoint. I always give you both sides. The bear case on the European silver buying thesis is serious, and you need to hold it. EU officials stress that 2026 is unlike 2022. The supply chain is more diversified and gas consumption has diminished. The main concern now is pricing. Asia is more dependent on this region's LNG supply than Europe as a whole. If Europe won't feel the impact in terms of immediate gas shortage, high prices will raise the cost of storage refill operations. Yahoo Finance. That is the honest starting point for the bear case. Europe is more resilient than 2022. The bloc has diversified away from Russian gas, built LNG import infrastructure, and reduced overall gas consumption by approximately 11% from 2022 peaks. Even under extreme weather scenarios similar to the 2018 European cold wave, analysts estimate Northwest Europe would still retain about 11% of gas storage by the end of March, a level considered sufficient to avoid blackouts. JM Bullion. No blackouts. The system does not fail catastrophically. It gets more expensive. More expensive gas is inflationary and stagflationary, but it is not an emergency that forces panic buying of silver by institutional funds. Institutional buying happens when funds rebalance their portfolios over weeks and months in response to a changing macro environment, not in a single morning session at the LBMA. Goldman Sachs economists predict that the ECB will only raise interest rates in the worst-case scenario, where inflation rises by 3.6 percentage points by the end of 2026, amid a surge in oil and gas prices. Oxford Economics expects the ECB to keep rates unchanged this year. Metal Sedge. The ECB trap I described is real, but the most likely ECB response, according to Goldman Sachs and Oxford Economics, is to hold rates and look through the energy price spike as temporary. That is the 2022 playbook. In 2022, the ECB did eventually hike, but started late because energy-driven inflation was expected to be transitory. If the ECB follows the same playbook, the stagflation scenario that drives institutional silver buying does not materialize urgently. It develops slowly over months, not in a single Monday morning London session. The second bear argument, the LBMA benchmark is wholesale. Retail silver coins and small bars incurred 20% VAT when purchased in the UK, but when traded in wholesale 1,000 troy ounce bar form and stored in an LBMA-approved warehouse, silver is VAT-free. Gold silver. The LBMA is not where retail European savers buy silver. It is where institutions trade 1,000-ounce bars. Institutional portfolio rebalancing in response to an energy shock happens on a quarterly basis, not in a single Monday morning session triggered by a weekend of news. The third bear argument, silver already crashed. Silver's historic rally hit a wall after a brutal one-day sell-off. JM Bullion. Silver went from $96 to below $80 in a single session this week. The funds that wanted silver as a war hedge already had the opportunity to buy it at $75, $80 during the correction. The London Open is not repricing from $85. It may already reflect much of the European energy concern in its current price. Hold the bear case. The London Open matters, but the magnitude of its impact depends on whether European institutions are rebalancing portfolios urgently or executing a slow, measured shift over weeks. Section 5. The three scenarios, honest probabilities for what happens before Wall Street opens. Scenario 1. The London bid. Possible. European institutional buyers enter the LBMA morning session with meaningful silver purchase orders reflecting stagflation positioning. The LBMA silver price fixes above Friday's COMEX close, a $3 to $6 premium. COMEX opens at 8:20 a.m. Eastern, tracking the London fix rather than Friday's close. Silver gaps up to the $88 to $91 range before the first COMEX session candle closes. This requires the European energy crisis to be acute enough and the ECB trap narrative convincing enough that institutional funds are actively repositioning Monday morning rather than waiting for quarterly rebalancing. Scenario 2, the grind, most likely. London opens with modest buying interest reflecting the new energy risk environment. The LBMA silver fix comes in slightly above Friday's close, $1 to $3 premium. COMEX opens tracking London. Silver trades in the $86 to $89 range Monday morning. No dramatic gap up, no dramatic sell-off. The European energy crisis is real and being priced gradually over days and weeks rather than in a single session. This is the base case. Not because the thesis is wrong, but because institutional portfolio rebalancing is measured, not panicked. Scenario 3, the reversal, also possible. Any credible diplomatic signal over the next 4 hours. Oman mediation, Qatar resuming production, Hormuz partial reopening deflates the war premium in both the London and COMEX sessions simultaneously. European gas prices pull back. The ECB stagflation narrative weakens. Silver opens flat to down Monday morning. The bull case for the London bid requires the war to remain unresolved through Sunday night. Markets price in quick wins. If Trump's 4 to 6 week timeline gets revised shorter, or any ceasefire signal emerges, the safe haven premium evaporates faster than it built. Financial content section 6. What to watch before the London Open. All free, all public. I sell nothing. No memberships. No Discord. No paid alerts. If you see my name on any paid service that is not me, you find me here and on X where the data breaks when it happens. Your specific watch list for the next 4 hours. Dutch TTF gas futures. This is Europe's benchmark gas price. It trades on the ICE exchange. Search TTF gas price. Free data available on Trading Economics and Investing.com. TTF closed above 60 euros per megawatt hour on Tuesday, a 35% single-day move. Be in Crypto Watch where TTF opens Sunday night. If TTF is above 65 euros per megawatt hour when the London silver session begins, the energy shock is still accelerating. If TTF has pulled back toward 50, the market is pricing in partial relief and the London silver bid weakens accordingly. COMEX electronic session, currently live. Silver has been trading in the electronic session since 6:00 p.m. Eastern. Watch where silver is trading right now versus Friday's 85.29 close. The electronic session gap, positive or negative, is the first Western price signal of the week. If silver is already trading above $87 in the electronic session, the London Open is confirming a move that has already started. If silver is flat or down, the London Open is the first real test. Qatar force majeure status. Any announcement from Qatar Energy over the next 4 hours about resuming LNG production immediately reduces the European supply stress. Watch Qatar Energy's official communications and the Reuters commodities wire. Qatar Energy declared force majeure on March 4th following drone strikes at Ras Laffan Industrial City. 99 bitcoins. If that declaration is lifted before London opens, the European energy crisis becomes significantly less acute. LBMA silver price fix. Published daily at noon London time, 7 a.m. Eastern Monday. This is the number that sets the benchmark before COMEX opens. The LBMA fix is published publicly on the LBMA website and on all major financial data terminals. Compare the noon London fix to Friday's COMEX close. The spread between those two numbers is the precise measure of what European physical silver buyers thought silver was worth on Monday morning, before COMEX had its first say. Section 7. The honest conclusion. Here's the complete picture as of Sunday night, March 8, 2026. European gas storage has just dropped below 30% of capacity, well below its 5-year average. Kitco. The Strait of Hormuz has been functionally closed for 9 days, more than double the previous record set during the Suez Crisis of 1956. Qatar declared force majeure on March 4th. Dutch TTF gas futures rose 76% in a single week. BN crypto Eurozone interest rate markets are now pricing a 33% probability of an ECB rate hike by December 2026. Metal sedge, a complete reversal from the rate cut expectations that were fully priced in 2 weeks ago. The LBMA silver price is the global benchmark price for unallocated silver delivered in London, used by producers, refiners, banks, central banks, fabricators, and consumers around the globe as their reference price. Metal sedge. That benchmark sets at noon London time, 7 a.m. Eastern, 1 hour and 20 minutes before COMEX opens. In approximately 4 hours, the European institutional buyers who have been watching the TTF move 76%, who have been watching storage fall below 30%, who have been calculating what a stagflation scenario means for their portfolios, get their first opportunity to express that analysis in the silver price. The ECB trap is real. The energy crisis is documented. The LBMA mechanism is the largest wholesale silver market in the world. These are not theories. They are documented facts. What is not certain is the magnitude of Monday morning's response. Whether European institutions are rebalancing aggressively now or gradually over weeks, that is what the LBMA fix at 7 a.m. Eastern will tell you. Not me. The number itself. Pull the TTF price right now. Watch the COMEX electronic session. Check the LBMA fix at 7 a.m. Eastern before COMEX opens. Let the actual data tell you which scenario is playing out in real time. Invest with logic, not hype. Protect your capital. Europe is waking up in 4 hours, and the LBMA sets the global silver benchmark before Wall Street has its first cup of coffee. Drop London Watch in the comments if you are tracking the LBMA fix Monday morning, and drop London bid, grind, or reversal to tell me which scenario you think plays out from where you are sitting right now.